The global energy market is a complex web, intricately woven with threads of supply and demand. It connects producers and consumers across continents, creating a vast network of interdependence. This intricate system, however, is not without its vulnerabilities. Disruptions can occur at any point, causing ripples that affect the entire network. Geopolitical events in particular can send shockwaves through the entire network, altering the balance of supply and demand. The recent trade tensions between the United States and China provide a prime example of this interconnectedness. These tensions have highlighted just how fragile the global energy market can be. The U.S. China trade war, which began in 2018, has had far-reaching consequences. It has not only affected the economies of the two largest global powers, but has also sent ripples through the global energy market. These consequences extend beyond tariffs and trade deficits. They have impacted global supply chains, causing delays and increasing costs for energy transportation. The energy sector in particular has felt the tremors of this geopolitical earthquake. From LNG terminals to oil refineries, the entire industry has had to adapt to the new realities of a shifting geopolitical landscape. Energy, a vital resource for economic growth and development, has become a pawn in this high-stakes game of economic and political leverage. The interdependence of global energy markets means that any disruption, whether political or economic, can have far-reaching consequences, affecting not just the countries directly involved, but the entire world. As the world moves towards renewable energy sources, the dynamics of this interdependence are likely to evolve. International cooperation and strategic partnerships will become even more crucial in ensuring a stable and sustainable energy future. In this interconnected world, the future of energy will depend on our ability to navigate these complexities and work together towards common goals. The path forward will require not just technological innovation but also diplomatic finesse and a commitment to global collaboration. China's decision to essentially stop importing liquefied natural gas from the United States in 2019 sent shockwaves through the global energy market. This move, a direct response to escalating U.S. tariffs on Chinese goods, had immediate and significant impacts. The U.S., once a burgeoning LNG exporter, found itself with a surplus of natural gas. This surplus forced American producers to scramble for new markets. The suspension of Chinese imports also underscored the vulnerability of relying on a single buyer for such a strategic commodity. China's decision to curb U.S. LNG imports was not just a retaliatory measure. It was part of a broader strategic shift in its energy policy. Facing growing energy demands and seeking to reduce its dependence on any single supplier, China has been actively diversifying its energy sources and partners. This diversification strategy has led China to forge closer energy ties with Russia, Central Asian countries, and even some Middle Eastern nations. These new partnerships offer China greater energy security and leverage in the global market. It also highlights the evolving geopolitical landscape in the energy sector. Europe feels the pinch. The energy landscape in Europe is undergoing a seismic shift, driven by a confluence of global events and regional dependencies. The ripple effects of the U.S. China trade war on the energy market have been felt far beyond the borders of these two economic giants. The trade war has disrupted established supply chains and created a volatile environment for energy trading. Europe, heavily reliant on Russian gas, has also found itself navigating the choppy waters of energy politics. The continent's dependency on Russian gas has long been a point of contention, influencing both domestic policies and international relations. The decreased flow of U.S. LNG to China has intensified competition for available supplies. This shift has forced European countries to seek alternative sources, often at higher costs, to meet their energy needs. Increased demand from other Asian buyers has pushed up LNG prices globally. As Asian economies continue to grow, their energy consumption rises, creating a tighter market and driving prices upward. This price surge has placed additional pressure on European economies already grappling with inflation and cost of living crises. Households and businesses alike are feeling the strain, with energy bills soaring and economic stability being tested. The situation underscores Europe's dependence on Russian gas and the challenges of diversifying its energy sources. Efforts to transition to renewable energy are underway, but the path is fraught with financial, technological, and political hurdles. European leaders are now more than ever focused on creating a resilient and sustainable energy future, balancing immediate needs with long-term goals. New alliances, new energy maps, In this section, we delve into the evolving landscape of global energy alliances and how they are being reshaped by current geopolitical dynamics. The U.S.-China trade war has accelerated the reshaping of the global energy map. This conflict has forced many countries to reconsider their energy dependencies and seek new partnerships to ensure energy security. Traditional energy partnerships are being re-evaluated. Long-standing alliances are under scrutiny as nations look to diversify their energy sources and reduce reliance on any single country or region. New alliances are being forged based on shifting geopolitical priorities. Countries are now more open to exploring energy deals with non-traditional partners, leading to a more complex web of energy relationships. This realignment is leading to a more fragmented and potentially volatile energy market. The uncertainty in traditional energy markets is causing fluctuations in prices and making it harder for countries to plan long-term energy strategies. The rise of renewable energy sources further complicates the picture. As countries invest more in wind, solar, and other renewable energies, the global energy map is becoming even more diverse and decentralized. While renewables offer a path towards a more sustainable energy future, their integration into the existing energy infrastructure presents both opportunities and challenges. The transition requires significant investment in new technologies and infrastructure to ensure a smooth and reliable energy supply. The pace of the renewable energy transition will also play a crucial role in shaping the future of the global energy landscape. As countries race to meet their climate goals, the speed and efficiency of adopting renewable energy will determine the stability and sustainability of the global energy market in the years to come. American LNG at a crossroads. The U.S. LNG industry, once poised for exponential growth, now faces a more uncertain future. The loss of the Chinese market has forced American producers to adjust their strategies. They are seeking new markets in Europe and Asia. Furthermore, the changing dynamics of the global energy market require a reassessment of long-term investment plans. The industry must adapt to the new geopolitical realities. The U.S. LNG sector will need to be agile and innovative to thrive in this evolving landscape. Navigating the energy future. The U.S.-China trade war has exposed the vulnerabilities of a globalized energy market susceptible to geopolitical shocks. The experience underscores the importance of energy security, diversification, and international cooperation. As the world transitions to a more sustainable energy future, navigating these complex dynamics will require careful planning. Cooperation between nations is essential to ensure a stable and secure energy supply for all. The energy landscape is changing. Those who adapt quickly and strategically will be best positioned to navigate the challenges and opportunities that lie ahead.